Welcome to this second episode of the technical analysis session of Caught on the Energy Web. With me there is Nick from CryptoCoinTalk again. He will host this session and give us some insights in the technical analysis of Energy Web. As you could have seen by now, Energy Web has been starting to go up again. We wanted to influence the technical analysis a little bit before we got started, so we thought we'd place a good buy order to push up the price a little bit positive direction. But I'll let Nick talk all about it and let him explain what is going on presently. Nick, word to you.
Hey Dayon, can you guys hear me first of all? Can we do a little sound check first?
Yes, all clear.
Yes? Okay, that's good. That's good. Let's get started right away. So let's move towards the charts. Let me check. If I'm right, you can see my charts, correct?
Yes, I can see it.
Okay, perfect. So today we're going to discuss Bitcoin again, and then after, of course, we're going to look at Energy Web. Energy Web has been showing some signs of strength, so that's nice. We'll get into that in a bit. First of all, let's start off with Bitcoin. Bitcoin has performed pretty well over the past few weeks and months. If we take a look at the liquidity of the range with this is the range low, range high. I always work with liquidity because the market always is always searching for liquidity. That's just how the market works. That's how crypto works. That's how Forex works, commodities and traditional markets, of course. So if we take a look at the liquidity on this picture here, what we currently are seeing is that we took the liquidity on the downside. So we we took all the stop losses below this low. So that's what liquidity is. Liquidity is just stop losses of other market participants. So if people go long here, people are being taught that they have to put their stop loss below the low. If people are going short, people learn to put their stop losses above the high. And those stop losses, they form the liquidity for the market. And the market is always looking for liquidity. I'm getting into a few examples in a bit so you can understand how this all works. So first of all, we took the liquidity on the downside, and the previous episode, I'm not sure if you guys can see it. I'm showing a YouTube moment of previous stream. Not sure if you guys can see it, but in there we discussed. Sorry?
I can see it, yes.
Okay, perfect. So what we're seeing here is that we were trading around 22.7K. I was talking about the consolidation period, and that if we would see a breakdown of the low of the range, that would mean we would see a deeper retracement into the next form of support, which is this consolidation area. And we went straight into that. This is where I took a long all the way towards the range high, took 4 TPs, take profits, and the trade was complete, so that was nice. So it was nice to see that the bullish thesis of Bitcoin played out perfectly, what we discussed during the first episode of TA. So definitely go take a look at that after this episode. So what happened is we were consolidating here. We saw the pullback here into this consolidation area of the 21.6 towards 20.4, something like that. And we found support here. We did a small consolidation, and eventually we saw the push higher. So why was I looking for higher prices? Why was I still bullish when the market was already here? That was because of the liquidity picture. The liquidity picture was telling us we took the low, and what usually happens is the market starts looking for liquidity on the other side of the market, the other side of the range in this case. And the liquidity on the other side was above the major high, above 25.2K. So I was talking about I am expecting a move towards 25.2. What happens after doesn't even matter. All that matters at that point was the move towards 25.2K. And all I want to do is profit from that potential move towards the range high 25.2K. So eventually that happened. And now we took the liquidity on the upside. So what we did right here was the stop losses above this high. So the people who went short here put their stop losses above the high. And what did the market do? It went toward those stop losses. It took the stop losses. People who were short here got put out of their trade. So they went automatically long, because if you want to get out of your short, you have to get long. If you want to get out of your long, you have to get short. So you have to do opposite trade. And because it's a stop loss, it's an automatic trade. So once the order has been met, so it moves above this high, people will sell their positions and will get out of their short, which means they go long. And that's when smart money enters the market. So that's exactly what happened here. People who are left out, and then the market starts pulling back. And now it's looking for liquidity on the other side again. So within this bigger range of the range high and the range low, we can also look for smaller ranges to trade. So that's what we did here. That's what you could do here, but also on a little bit bigger picture. So this high and this low are the main areas to look for liquidity at this point. And since we took the liquidity above here, and I know it sounds a bit difficult, it is a bit difficult at first, but as soon as you get used to using this technique, this concept, it starts getting pretty easily, and you can definitely benefit from it. That's how I make my money. That's how I manage the trade fund I run. And that's how I do it for myself. I'm doing this full time, by the way, since March 21, and I've been doing this trading since 6 years already. So I do have some experience. All right, let's move towards this picture. So what we're looking for currently is that we take the liquidity on the downside, and if we start seeing strength, that's when we start looking for potential long opportunities. That's when the entry pattern forms, and that's when we get active and start looking for upside again. So all we are currently looking for is one more push down, and then potentially start looking for longs towards this area. So as long as we don't hit the 21.351K, there is some chance for potential shorts, maybe a little scalp here. If we start going to the local time frames, this is the current range. So as you can see, also on the lower time frames, you can also look for potential shorts. So we took the low, we start moving towards the upside. Now we took the high, and we might start looking for downside again. So you can look for some shorts here. If the entry pattern forms something like this, then you enter the short towards here and potentially 21.3K. So that's the main action plan right now, but it's only just a small scalp trade. The bigger picture is more interesting if we start hunting that low around 21.3K. That's the main objective for me. That's where the biggest opportunities lay. Also, when we look at market structure, that's a bit of a contrarian view at this moment. So liquidity says more downside, which is fine. Market structure tells me something more bullish, because this is a high, this is a low, this is a higher high, higher low, higher high again, and we are now again in a potential higher low area. And as long as we maintain this structure, we can still start looking for longs, because the local uptrend is still up, of course. So if we start taking liquidity, we show strength, that's when I'm definitely interested in longs. Why? Because of the high-low structure. So I still want to get involved in longs mainly. All right, let me show you guys something nice about the liquidity aspect, because I know some of you guys think liquidity is bullshit. What is he talking about? But as you can see in this picture, and we are looking at the weekly chart, it works at the monthly chart as well, the daily chart, the 1 hour chart, the 1 minute chart. It doesn't matter. Liquidity and technical analysis works at every single time frame. So if we start looking at how these type of tops form, what you usually see is after a big trending move, price starts consolidating, starts forming distribution, and then eventually price starts pushing down. What you often see when Bitcoin forms a top, it's not something like this. It's usually something like this, and then down. And what you often see is during that consolidation period, we create a high, and eventually we take that liquidity and then start pushing down. So that's exactly what happened here. That's what happened here. That's what happened here, 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 and now again over here as well. So is this coincidence, or is there definitely some kind of theory, concept, and working strategy behind it? I think the latter. So, and it works on the downside as well. So if we take a low, it usually gets hunted before the real move, the other direction, happens. So we took the low here. It's quite minimal here, but we did take the low here. We took the local low as well over here. And it also happened over here. It happened over here. It even happened during the bottom of this cycle. This is where I got long. So if we zoom in a little bit, this is the low. You can't anticipate on this. This is just knife catching. It's gambling. You can't anticipate on this. But with the strategy I use, you can anticipate on this. So what you're doing is you're trading the confirmation of the potential bottom. And all you do is looking for the local time frames to look for this entry pattern. So a high, a liquidity grab, a higher high, and then on some form of demand, an order block, a consolidation period, fair value gap, whatever you use for your entry concepts, that's where you start looking for longs, and then you target higher prices. That's how liquidity works, guys, and you can benefit from it. Here as well. We took the high and then saw the movement the other way.
Awesome. So now
Right.
the $1 million question is, where are we heading with Energy Web in relation to Bitcoin, right?
Exactly. So let's conclude what is happening here. We are currently holding the higher low structure. As long as we maintain the higher low, there are definitely chances that we might see more upside from here, with eventually maybe the 25.2 again. And maybe if we start breaking out 28 and maybe higher, we might do one more little correction here. If we hold there, things might get really interesting. If we don't hold here and we start moving a lot more down, things could get pretty ugly, because then, and let me grab the Binance chart again, we start looking for lower liquidity levels, which is 17.6 range low, and potentially even 15.4. So that's something to keep in mind if we start showing weakness here. All right, that's Bitcoin. Let's just move forward towards the energy web, because we did see some upside recently. We did have some hype around the project as well, a potential a collaboration between Energy Web and Tesla, but of course that didn't really happen. It could still just happen, but not during an announcement like we saw recently at Tesla. So we'll just see. But let's just focus on the pricing action itself. This is probably some sort of sell the news event. I believe we were around here during the previous episode, and I was talking about more upside because also liquidity-wise, we again here, this is the low, this is the high. We took the liquidity on the downside. So what I was expecting was movement towards the other side of the range, towards the other side of the liquidity. So we took the low and we went all the way towards these highs. I've talked about this in the previous episode. So if you don't believe me, I did talk about this. That's just how liquidity works. It's not hindsight. It's just how the market works. Does it happen every time? No, definitely not. But the majority of time it does. And for the times it doesn't work, you have your stop loss placement and you trade based on confirmation. So
Nick,
it's
can
what
you tell us a little bit, how do you find where the liquidity is? Do you anticipate that, or is that something you look at looking backwards, in time? So is it only visible afterwards, or do you have tools that you specifically use to find where the liquidity is at? Um,
Yeah, you do have some tools, some indicators, but I'm mainly using price action itself. So, um, what the most important liquidity levels are the areas where the big swings happen. So the big movement. So this is a big movement towards the upside. This is a
mhm.
big movement towards the downside. And as you can see, price shows a reaction. So as you can see, we saw a big move towards the upside, big move towards the downside. So then there could be a lot of liquidity resting above these highs. And exactly what happens here is we start looking for liquidity. And as you can see, we saw a big movement from here as well towards the upside. Eventually, we took the low here perfectly. We took the low and then moved towards the liquidity on the other side. So is this coincidence? I don't think so. And you can use this in your advantage. So also here, big movement towards the downside. For some reason, price stops here and starts pushing higher. And it could be because of some kind of narrative, some news that came out. It doesn't matter. People will see this as a great place to place stop losses below. So there is liquidity resting. And as you can see here, this is where the low forms. Price goes below, takes one more time the liquidity locally, and then start pushing towards the other side again. And as you can see, we nearly took the liquidity here. We nearly took the liquidity here. So we have a big build-up of liquidity. And eventually the market will start looking for liquidity again. So as you can see on the downside here, we took the liquidity here. And look where price is heading once it took liquidity on this side. It went all the way towards the other side of the liquidity and took all this liquidity. This is textbook price action. It's really nice. So now let's move forward towards my expectations for now. Um, I don't think everybody really likes what I think liquidity based, because if we start looking at the weekly, um, once again, we rejected the previous key resistance at 4.6. I've been talking about this in the previous episode as well. I want to see that price starts accepting above 4.635. It didn't happen. We rejected it once again and we saw a movement down. Now we're holding here around this consolidation period, so that's nice. So there is still a chance that we might see more upside. And as you can see, this was an important low that went all the way up towards a new high. So that's important because people put their stop losses below this low. And as you can see right now, we took the liquidity, and if you zoom in a bit, you can see how price and volume is picking up because stop losses are being triggered here and people are buying here. And now we see some sort of liquidity run to the upside. So that's nice to see. We need to hold this. If we lose 3.6K, I don't see any reason, especially with all these lows here, all this liquidity. I don't see a reason why we are not seeing 2.8 again. And I've been talking about this previous time as well. If we don't manage to get above here and hold here, and we fall back into the range, I'm expecting a move towards the other side of the range. Because if we clear this chart a bit up, and we look at it like this, it's just a range. And you trade a range until it doesn't work anymore. This is the range low, this is the range high. We took the liquidity, moved towards the upside, we took the liquidity locally again, and now we're probably, which is very likely, looking towards liquidity on the downside again. But from there, especially if we're starting to see some strength, it's a great buying opportunity to see then move towards the other side of the range, and potentially if we start trending towards new highs. That's what we're all looking for. That's what we're all hoping for. And yeah, it could still happen right now from current prices, but we need to hold here above 3.6, and we need to create a local higher high. If that happens, we can start trending. We can target much higher prices. But if we don't, and we form another lower high, then we're probably going to see 2.8K. That's my conclusion for this this chart.
It's a shame we can't go short on Energy Web, right? I mean, the only way to go short is to go out of Energy Web, not
Yeah,
any way to
exactly,
do it otherwise.
exactly. That's the thing. You can use derivatives long. You can long or short this pairing, but it doesn't matter. It's all about the concept and the way the market uses this concept. That is just how the market moves. Even though you can't even short it, but as you what you already said, you can sell it over there. You know.
I took the liquidity just now. Don't tell it in the main groups, they will be hating. But I did actually.
Yeah, let's just hope we go for a new all-time highs from here. I would like that, but
Same here. Same here.
yeah.
My long-term backs would like that as well.
Yeah, the thing is, we're just consolidating. I get why people got excited over the past few weeks. It's nice. We have been trending nice. We might still be trending. It could be the case if we start holding here and we push again for a new higher high, maybe because of some sort of narrative or potential hype coming up. Could be the case. But as long as we remain inside this bigger consolidation period of like 5.50 towards 2.8, something like that. We are just consolidating. We are potentially accumulating, which is good. So it doesn't even matter if we start, if we don't immediately go for new all-time highs. The rule is like this: the longer the consolidation, the greater the expansion. So eventually, if we start breaking out, things could get pretty exciting pretty quickly.
Nice. So yeah, there's a good chance that we're going to see lower lows for now, but they're still ranging, as you said.
Yep.
How does that look? I saw that Trollfaces asked that in the chat as well. How does that look on the BTC pairing? So you've got Energy Web token BTC pairing as well.
Yep.
Does that provide any indication of higher prices, hopefully, or is that as shitty as the USDT pairing, so to say?
Yeah, what I really like about this BTC pairing, if we compare to like 99% of all BTC pairings of all the altcoins at this point, all we see is things like this. It's trending downwards still. There are some altcoins holding up pretty nicely, but the majority is showing this. And you can also see it when looking at the Bitcoin dominance. It has been trending up for a while already. So money is flowing from altcoins towards Bitcoin. But if we look at Energy Web token, volume is nice, by the way, on the USDT pair as well. What we're currently seeing here is that we're moving sideways. We are not trending down like on the majority of the altcoin market, but we are moving sideways, and I really like that. So what this chart tells you is that the market, the energy web token, is just holding um, pretty pretty strong during Bitcoin volatility. So that's really nice. And if we take a look at what currently is going on here as well, we took the liquidity. Locally, we took the liquidity. So it works on BTC pairings as well. Of course, the higher the volume, the better it works. On the downside, here as well. On the downside, and here as well. So it works fantastic also on BTC pairings, but let's keep it a bit clean. If we look at what we're currently seeing here is just sideways action, just like the USDT pairing. So probably accumulation could be the case. This zone is from the monthly demand around 12,750 and 10,000. As long as we are above there, there's not much of a problem. We've discussed it also during the previous episode where I said as long as we hold here, that's fine. It's completely fine. Could be a potential higher low on the macro perspective, but overall just range bound, just consolidating. Just consolidating. And as long as we hold above the zone and especially below, we should not lose this low. We may deviate below, but we should not lose it. We're just range bound, just consolidating. And that's good. That's good because it means it's showing strength against Bitcoin. It means it's not bleeding towards zero, for example, just like a majority of the altcoins. So that's a really good sign in my opinion.
Awesome. I think we should call ourselves Energy Web Token Rangers.
Yeah,
It's
I
a good
think
new
so. We
nickname,
got
right?
that's what's currently going on with our positions.
All right. I do believe the BTC graph looks a little bit better, considering that we're going sideways instead of going down. Um, but yeah, it is the reality as it is. And also on the USDT pairing, as you mentioned, we're still in range bound, so to say. So it's not looking that bad. It could be worse. But we also have to be realistic here that the chances are higher than normally than we saw last month, for example, that we are going to test the lows again at 2.8, which you mentioned. So yeah,
Yeah,
thanks for the analysis.
yeah, no problem. Yeah, it all depends on Bitcoin, of course. I mean, if Bitcoin starts going lower towards 50.4K, yeah, I don't see a reason why Energy Web doesn't go for the lows either. But um, yeah, as long as Bitcoin remains relatively calm, so it stays around current prices, maybe a bit lower, maybe a bit higher, Energy Web token should be good. And once hype around refi and the project itself starts picking up, and honestly, I have no doubts that that will happen eventually. We should be good with our positions, I think.
That gives me confidence to hold.
Definitely.
And to keep some on the sidelines to buy at 2.8 if people decide to sell there.
Yeah, it's an interesting area.
Yeah.
No
All
financial
right.
advice to us.
No, definitely not. We're not doing that. But I think this is an interesting analysis. Thank you very much. Is there any questions or anything to add from your side, Nick? Now is the time. Nothing? Okay. Then I wish you guys a good day. Thank you very much for attending this TA session. Thank you, Nick, for being realistic here with us and for keeping expectations under control. There's no more upcoming potential Tesla news or anything. At least, I mean, it may be, but we don't know anything about that currently. There's no hype like that in the market, so it's good for a good down to earth analysis. And let's go by the TA and see how it goes.
Yes.
See you guys all next month for the next TA session, and let's see if you're current analysis is as good as the last one, Nick. Thank you very much.
Let's hope so.
Yes, I hope so too. Have a good day, guys. Bye bye.
Bye bye. See you later.